Okay, so global markets have just hit an absolute wall. We're talking a sudden, really dramatic downturn that's left a lot of investors just scratching their heads, asking one simple question: what in the world is going on? Well, that's exactly what we're going to unpack right now.
And when I say turmoil, I mean it. This is not just some minor little dip we're seeing. It's a sudden, pretty severe drop that feels like it came out of nowhere. All you see on the charts is red, and you can just feel the tension in the air.
And just look at how widespread this thing is. It's not just one sector getting hit. We're seeing big tech on the NASDAQ, the entire S&P 500, even the classic safe haven, gold. And yeah, Bitcoin too. Everything is taking a nosedive at the same time. It's like a perfectly synchronized plunge.
So that begs the big question, right? What's the engine behind all this? I mean, when everything sells off at once, that usually points to some kind of major shock to the whole system. And analysts are pointing to a couple of really key things. Let's start with the first one: a huge political shockwave.
First up, let's talk about politics. It turns out the trigger for all this chaos isn't purely economic. It's actually got deep roots in some pretty surprising political stuff that just went down in the United States.
A slap in the face. This is the phrase that's being thrown around in all the market analysis right now. And it's not just some snappy headline. It's being pointed to as a direct cause for all this instability. You know, if there's one thing investors absolutely hate, it's uncertainty. And suddenly, the political landscape is just full of it.
So here's what's behind that quote. We just had some key elections in several states, and they ended in decisive victories for the Democratic Party. Now you can put your own political views aside for a second, because the market only sees one thing here: a major disruption. It's signaling a potential power shift, and that raises all sorts of fears about new policies or even legislative gridlock. And that's what's really rattling investor confidence.
And this quote right here from one of the newly elected officials, it's just openly defiant. It really captures the tense mood perfectly. See, it's this kind of supercharged political atmosphere that makes investors really, really nervous. They start pricing in the risk of unpredictable policy changes, and that usually means selling first and asking questions later.
All right, now for the second major factor. And for this one, we can see it playing out really clearly in the crypto market. Bitcoin, which is often kind of a canary in the coal mine for risk, is flashing some major warning signs right now. Wow, okay, this is a huge technical breakdown. For any traders watching, you know that dropping below the 200-day moving average is a classic textbook bearish signal. On top of that, it's testing that big psychological $101,000 level for the first time in months. That just shows you how intense the selling pressure really is. So there's this weird anomaly happening that analysts have nicknamed the jaws of death. And here's why that name is so fitting. Global liquidity, which is just a fancy way of saying the amount of cash sloshing around the financial system, is actually still going up. Now, normally, you'd expect Bitcoin's price to follow right along with it, but it's not. It's doing the opposite. And that growing gap between the two, well, it looks like a pair of open jaws ready to snap shut. It's a big, big warning sign. So why is this happening? Well, it's all tied into the bigger macroeconomic picture. The Federal Reserve keeps signaling that interest rates are going to stay higher for longer to fight off inflation, and that creates this kind of pressure cooker environment. It makes the US dollar stronger, and it puts this immense downward pressure on anything considered a high-risk asset. And yeah, that definitely includes Bitcoin. And this pressure cooker effect, it's not just contained to crypto. Oh no, the anxiety is creating this ripple effect, and it's leading to some very, very unusual behavior over in the stock market. Just look at this strange divergence from back in October. While the overall S&P 500 index actually grew, the Magnificent Seven, the biggest, baddest tech stocks on the planet, they all fell. This is such a classic sign of nervousness because it shows that investors are starting to sell the very leaders that have been propping up the market for years. And just to really hammer this point home, a note straight from the Goldman Sachs trading desk confirms it. The gap in performance between big tech and the rest of the NASDAQ is the widest it has been since, get this, 2008. Yeah, anytime you hear a comparison to 2008, you know it's a major red flag. So, let's put it all together. You've got political shocks, massive macro pressure, and even cracks appearing in big tech. It all paints a picture of a very, very uncertain path forward. And this right here, this is the dilemma that every single investor is facing right now. It's a total tug-of-war. On one side, you've got the bears,
pointing to that scary jaws of death anomaly that suggests there's more pain to come. But on the other side, you have the bulls, looking at a key indicator, the stablecoin supply ratio, which is at a level that, historically, has signaled a market bottom. It's a classic bull versus bear standoff.
So where does that leave us? Honestly, we're at a crossroads. There are these incredibly powerful forces pulling the market in completely opposite directions. You've got the political turmoil, the Fed's relentless pressure, and these totally conflicting technical signals all creating this thick fog of uncertainty. The big question for everyone now is, which one of these forces is going to win out? Because the answer to that will dictate the market's next big move.